Welcome everyone to Sudbury Talks with Gwen Price. And in honor of Women's History Month for the month of March, I'm celebrating women in business. And the first person I'm going to have an interview with is Debbie Slywchuk with Cooperators. Hi, Debbie.
Hello there. Thank you for
Yeah.
inviting me and having me on your podcast. I'm really excited about this.
Yeah.
I've been following you for a long time, watching you do podcasts, and this is my very first podcast. So
Oh, there you go. It's nothing
I am a
scary.
little nervous about it, to be honest
Oh,
with
no.
you, but I'm excited about it at the same time. So
Well, it's just a way for people to get to know, people living in Sudbury. And in this month, I wanted to feature women in business. So I thought, why not? We've got to find a little bit out about each other and what we do and how we can help other people in the city and that sort of thing. So at Cooperators, you're on Cooperators on the Kingsway. And what do you do there, Debbie?
So I'm a certified financial planner. And one of the other designations I have is Certified Executor Advisor. So that's a lesser known designation in the financial planning field. So I use that just as an enhancement to the value that I bring to my clients. So when we're talking about doing financial planning, that involves like a lot of things.
Yeah.
And the executor advisor role is assisting clients with settling of estates. Now, part of my homework to get prepared for this is I listened to some of your other podcasts, and I listened to a lovely lady who has a business made right out of that. And I think this is a great opportunity for me to kind of bring that to the forefront, that when clients are dealing with a certified financial planner and actually doing financial planning work, a lot of that stuff is what we do, talking about your wills and your estates and that. And as you know, being an executor of an estate has a huge responsibility, as well as a liability, a huge liability. There's a personal liability involved in being an executor for an estate. So sometimes estates are as simple as just, the role really in a nutshell is gathering all the assets, paying off the debts, and distributing the residue of the estate. If an estate is simple, that's great, but estates can sometimes be complex and involve a lot of different things. So the role of the executor has really evolved, and the rules surrounding that, the CRA rules surrounding executorship changed in 2012 to include a lot more detail. And again, the liability and responsibility is huge. So the certified executor advisor role typically acts as a quarterback. When you're an executor, you could have as many as 18 different professionals that you need to deal with, accountants and lawyers and real estate and so on and so forth. So my role would be to sort of quarterback all of those services and partner with the executor to make sure that they understand and what they need to do, where they need to go, and whose role is what. The role of the accountant is the tax part of it. The lawyer is a different part of it. So dealing with a certified financial planner who has the CEA designation really benefits the client to be able to have that one person trusted relationship to sort of hold their hands through that entire process. So not that I'm an accountant or a lawyer or a realtor, but I have a high level understanding of all of those different areas to be able to work with my client. So there's no extra fee for that service when you are my client. That's part of the value add that I bring as being your advisor.
Certainly, I was just going to say, certainly as a seniors real estate specialist, I often deal with seniors and maybe somebody, they're realizing they have to sell their house and they don't always have everything in place and maybe they don't have the power of attorney in place and then of course, after they've passed, you hope for the executor's sake that a lot of things have been put in place ahead of time, because I've always said there's like so much paperwork just to leave this earth, it's as we go through, there's more and more demand on all of us in terms of the volume of paperwork. It isn't just a simple fill out this form and go on.
And it's the liability as well, right? That people don't really realize that is personal now, personal liability for the executors. So just to give you a quick example. So if you're, say you were the executor and they passed in the late summer, let's say, and they had a camp and they had a boat tied to the dock out there. And that's part of the estate now. And you were so busy doing other things and getting everything, and you didn't get to deal with this boat. And there was a storm, and the boat took on water, and the boat sunk, and then it was a write-off. Like there's some liability there now, that's an asset that was a property of the estate, that there was a loss. And
Okay.
that falls back to the responsibility of the executor. So it's no small feat anymore to do that. And with that, personal liability brings up the whole, executor fee discussion as well. Sometimes that's left for chance, and the executor goes, well, I don't know. Am I getting paid for this? How am I getting paid for this? It's your time. When I did my mother's estate, everything's done on business hours. The lawyers are on business hours. The banks are on business hours. So you need to take away from your own time to do all of this. So it really needs to be discussed, and some people don't want that responsibility.
No, I when people have asked me, I don't want to do, like I did help my brother when my dad passed, and it was more complicated because they didn't have a house any longer, but he had investments. And so there was different investments and all those sort of things, but just making sure the forms were filled out properly to give to CRA, and like I say, it just and I've dealt, of course, where people, they do have a valuable asset in the house, right? And that has to be sold
Taken
and the
care of.
money distributed, and what did the will say? And there's a lot involved for sure.
And in some cases, finding a market for that asset, depending on what it is as well, right?
Yeah.
So this is one of the advantages of partnering with a CFP ahead of time.
Yeah.
Because you could set things in place. You can name beneficiaries. There's such things as segregated funds that are only held with insurance companies. So that's an investment that has a death benefit guarantee, allows you to name beneficiaries because there's certain assets. If it's a non-registered portfolio that's not held in an RSP or a TFSA, there's no provision for beneficiaries on that. If you're at a bank, let's say, where segregated funds held with insurance companies provide that estate planning tool as well. So it's really important. Like, I really encourage my senior clients to bring in their adult children to meet me so we can have this estate planning discussion. So nothing is by surprise, and where there is opportunity for them to do things ahead of time before their death. And so there's that.
Well, because and also everybody has to be so transparent, right? Because there is elder abuse where people are coercing the senior to do whatever because they open their, I want the money now or whatever. They can't even wait for somebody to die to get their hands on that money. And
I've had that situation.
And so a little red flags sometimes go up for me too. And also, is the senior, cognitive? Can they make those decisions? They still have the mental capacity to do it. So a lot comes into play, and you have to tread very carefully. And and as a realtor, of course, I have to, and because I could be perceived as trying to take advantage of a senior, right? So, but I have seen, somebody actually, I think they were trying to avoid the estate tax because they put, he was still alive, but he put it in all of his kids' names. So there was 5 people on title. And so when that property had to be sold, all 5 had to sign that offer. It was
and
a
then there's the whole taxation part of that as
Yeah,
well. And then there's the
exactly.
whole thing about, like, I found often when I'm dealing with seniors, they'll have, um, on their non-registered account, they'll make joint ownership with their
Yeah,
adult child because that's what the banks suggest you do.
yeah.
They don't offer seg funds, so that's not a suggestion that they make. But here's the trouble with doing it that way. You've now given half of that asset
Mhm.
ownership to that adult child while you're alive. That can be called into matrimonial property on
Mhm.
marriage breakdown
Oh, gee.
because they own half of that. So you have a
Yeah.
$100,000 GIC, you make it joint with your adult son, he
Mhm.
becomes ownership of that 50%. He's
Yeah.
going through a divorce, that's called in as matrimonial assets. So it's a very
Right.
big pitfall. Then there's the
Yeah.
taxation,
Mhm.
of that. Half of that should be actually, he should be getting the T5 for that as well. And
Right.
creditors can attach now to that asset as well. So it's really dangerous for seniors to do that. I don't
Yeah.
advise them to do that. When you have a couple and the first spouse passes, there's all the spousal rollover provisions that can be taken advantage of. But the widower is the one that's going to then have the estate at the
Mhm.
second death. And that's when you really need to start looking at how do we structure this estate,
Yeah.
because that's when you can have the most opportunity to minimize taxes and probate. And sometimes probate's not a bad thing.
Well, I think people, yes, they worry about probate a lot because they think, oh my, the government's going to take everything, and they try to kind of, sidestep that.
Yeah.
And sometimes you shouldn't be
Yeah.
sidestepping it, right? Just do it, and of course that's why they need experts, somebody to help, because it all depends. If all you've got is $1,000 in a bank account somewhere, that's a different thing than if you've got 100,000 or you've got $1 million worth of
Yeah.
assets, right?
Yeah.
Same way, giving somebody power of attorney is so important who you give that power of attorney to, because it's,
Correct.
I keep
Yes.
saying, it's like giving somebody a blank check, fill in
Hmm.
the amount, and you have to be very cautious about
Yes.
who you're getting to help you with things.
And when you calculate the probate, when I say it's not a bad thing sometimes is if there's money in the estate, there's probate if there's an estate,
Yeah.
and there's money there to pay that, that's sometimes easier for the executor to then have the estate do what they need to do and then disperse of the residue. Because if you've got 4 or 5 children here, it's not always equalization. So if I'm going to give my daughter my $250,000 home and I'm going to give my son my $250,000 worth of RSPs, well, my daughter has a tax-free asset and there's 250,000 in the RSP, but that's fully taxable at my death. So after the taxes are paid on that, my son gets 125,000 net and my daughter's gotten so that's not really equal.
Yeah. Well,
Or if
that's
I name my
yeah.
son as the beneficiary and he got the whole 250,000, but the executor has a tax bill, there's
Right.
another issue. So
Well,
estate planning is really
yeah.
important.
Well, and it is, and I think so many people are afraid to, dive into it. We all think we're going to live forever and we never have to deal with it, but in fact, you do, and you should be doing it long before you think you might die. And nobody knows, right? But if I mean, even as young adults, you should be thinking about things, right?
Hmm.
Not just waiting till you're in your 60s and 70s,
Hmm.
and then all of a sudden you're very ill and you have to make some decisions,
That's right.
but lots of people never do it. And then of course, if there is somebody been named as the executor, they're handed this big mess and have to try to figure it out.
Yeah,
And
exactly.
it's so unfair, but that's why, I mean, that's really good, Debbie, to know, exactly. There's so many things involved in it, right? And people really have to think about it. And it's nice that
And the
you
rules
have that.
change over time. Regulations
Yeah,
change. Like I've
well,
talked to clients and say, well, my mom died and we didn't have to do any of that.
Yeah.
Well, that was pre-2012.
Yep.
Post-2012, there are definitely some changes to the regulations on probate and estates and that
Yep.
sort of thing. And I always tell everybody it's really because of this huge intergenerational transfer of
Yep.
wealth between the
Yep.
baby boomers and the next generation.
Yeah.
The government is missing out on a huge amount of taxes if they don't audit probate files now. And at
Right.
one time you used to be able to write stuff in your will and you'd say, well, my antique, dresser, let's say, is going to go to
Yeah.
my granddaughter, that brooch that's been down
Yeah.
in the family. And you could gift things through your will and it wasn't included in the estate for the purpose of probate. Well, it is now.
Mhm.
They want a dollar value on those things. So you need to be careful
Yeah.
what you're including in your will and those sorts of things. Now, again, I'm not a lawyer, but
Yeah.
with every single one of my clients, when we sit down, it's like, do you have a will?
Yeah.
How wills and power of attorney
Yeah.
together. And I will often review it for them and just to say, do you understand? Because I have a legal secretary background. So I used to,
Yeah.
and anybody who knows anything about legal secretaries, they do like lots.
Yeah, they do. Yeah, they're very, very important people.
Yeah. And so
Yeah.
I will just like review it, not from a perspective of giving legal advice because I stay in my lane,
Yeah.
but
Yeah.
just to say, do you understand what you've written here? Do
Mhm.
you understand that, and that, and then, so it's not stuff that people enjoy. I really have to pull teeth.
Yep.
And
Yep.
I hear people that, oftentimes, they want to take their advice from an armchair financial advisor. Well, my sister's brother's cousin,
Yeah. Or I read on the internet.
right?
Yeah.
I Googled it or I put it
Yeah.
out on Facebook and my friends on Facebook said,
Yeah.
those sorts of
Yeah.
things. So I understand that what I
Yeah.
do in my profession isn't everybody like loves to talk about that. Let's sit down and talk about dying. What does that look like? Like, what's
Yeah.
that going to have,
Exactly.
So I
Yeah.
do life insurance, right? Oh, nobody wants to buy life insurance. It's so valuable.
Yeah.
I've seen over the years, I've delivered death claim checks to families that I knew were going to be okay. And
Yeah.
then there was families where I knew that they weren't going to be okay. Either they didn't
Yep.
have enough insurance or they didn't have insurance, period, because they just don't want to talk about it.
Yeah.
I often
No,
say
it's
if life
sad.
insurance was made mandatory the way home and auto insurance is, everybody would have it, right?
Yep.
But it's
Yeah.
something that not everybody sees really value in it, or they say, well, I don't need my children to get rich if I die, or everybody's
Yeah.
got their own different reasons for
Mhm.
believing in it and buying it and that sort of thing. And
Yeah.
when you sit with a bank and you get your mortgage or with your broker or whatever, it's offered as creditor insurance, and a lot of people don't realize the pitfalls of that product as well.
Yeah. There's
And
so much. I mean, things have changed. Life is a lot simpler many years ago, right? But
to
over
some
time,
degree, for sure.
over time, things have just become more complicated for the average person. I mean, some people are well versed in all of those things, but the
It's
majority,
true.
I would say that I meet, they don't know, or maybe their spouse knew and the spouse has passed away and they're left with all of these things,
Yeah, I see
decisions.
that
So
so often, so often.
yeah.
Sometimes it's the women because the men's, been running the show all the times, but sometimes it's like senior men. I have a one I'm working with right now he's devastated to have lost his wife after all these years. He's overwhelmed with everything that needs to be
Yeah.
done and to understand. And so there's a lot of really just counseling. So I wear a lot of hats in this
Yeah.
business too. And one of the designations that I have is a financial divorce specialist. So I didn't
Mm.
renew that time and time again. All of these designations require education credits
Okay.
and
Yeah.
renewals and all of these
Yeah.
to maintain those designations. I let that one go. Now, again, this allows me to bring some value to what I do with my clients to be able to speak to that on a high level.
Yeah.
But I didn't renew that designation because that is a very involved piece when you're doing that and working
Yeah.
with the lawyers and doing the financial part of a divorce. And it just that takes a life of its own, and that's
Yeah.
practically a full-time career. So I let that go. But again, when you're dealing with a financial planner who has these other areas that, even like I said, as a high level,
Mhm.
it's a full service sort of a holistic approach, right? I can help you get to the professionals who are going to do the work for you, but to be able to help you understand it, when you've got that relationship and that trusting relationship, you can guide people along. I just spoke with somebody this morning actually, and he was a little blown away because he said, like, I've been with the bank forever and they never explained this to me and they never
Yeah.
explained that to me. And so the thing is, it's the advice piece. Anybody
Yeah.
can sell you an insurance policy and anybody could sell you a mutual fund, but I'm not a salesman, I'm an advisor.
Yeah.
So it's relationship building and it's giving the proper
Absolutely.
advice and hand holding and
Yep.
counseling and all kinds of stuff, but it's
Yeah.
very rewarding. It's
Yeah,
very
no,
rewarding.
and I feel that way too about real estate, right? It's not just about selling the house and going on to the next person or somebody buying a, it's very much about relationships. And well, thank you so much, Debbie. I think we're getting close to the end here, but is there any, I'm going to put all the links to your, you're on the Kingsway at 1112 Kingsway? The
That's
Kingsway?
right. That's right.
Okay.
Yeah.
And I'll put your phone number too, 705-525-2667.
Thank you. I appreciate that. Yeah.
Yeah,
The last thing I just wanted to say
yeah,
about the cooperators, well, they're not a new business. We celebrated our 75th anniversary in 2020. It was supposed to be a big launch of our new brand and our new logo and everything like that. So that
yeah,
kind of didn't happen. So,
yeah,
but what they've done is they've reinvented themselves into more of a wealth management advice-based office, whereas before they were home and auto, and that's what we
yeah.
were known for.
Mhm.
So they recruited me in 2019 because of my tenure in the industry, because of my expertise and my designations, because they want to be that one-stop shop and financial planning advice based. So there's some changes to
Great.
cooperators. You're probably seeing us more out there than you ever did before. So I wanted to get that out as well,
Yeah,
just to
no,
let everybody
appreciate
know.
it. Yeah, no,
Yeah,
for
that whole
sure.
focus
And
has changed.
yeah, well, and definitely, like I say, I'll have all your information there. And thank you so much because, I mean, we could talk for hours about it
We
because
sure could.
it
Yeah.
isn't just a, straightforward. There's lots involved with it.
Yeah,
So,
it's a big topic with a lot of moving parts to it for sure. So
yeah,
I really appreciated this
yeah.
opportunity
Oh, thanks, Debbie.
and
Well,
thank you so much.
yeah, well, enjoy the rest of March.
Thank you.
Okay,
Have
take
a great
care.
day.
You too. Bye-bye.
Bye.